Hey guys, I'm Manisha Mehta, and you've joined Manisha Gupta, and you've joined us live here at Moneycontrol. And I'm talking about the soft commodities right now, which are indicative of where inflation is headed, and also it is a raw material for various FMCG and companies otherwise as well. So I'll start with coffee, really, where we are looking at the Arabica prices now trading at a 1 month highs. The ice inventories are at a 3.5 month lows, and that clearly has been supportive for the prices. There also is a very bullish report that we've seen come in from the International Coffee Organization, which says that for the year 2022-23, it is going to be a deficit for a second straight year. And last year was a deficit of around 5 million bags. And as the demand starts to come back, we are looking at prices as well trading higher. The other one on my radar is rubber prices. Here as well, we are looking at a 2 week highs as the automotive rubber demand from the industry continues to surge. We are looking at support coming in here. And the other factor is the crude oil prices, which also have gained up by 4% in this week. That in turn also seems to be supporting the rubber prices. And then the producing countries are dealing with leaf diseases, adverse weather, read drought into that. And whether it's about Malaysia, Indonesia, Thailand, output in some sense or the other is getting impacted. Actually, for Malaysia, the natural rubber production in the month of January declined by nearly 39%, and the month of Feb is not expected to be very grand either. That is supportive for the rubber prices. Moving on, I want to talk about the sugar prices also because we are trading at a 4 week highs in the international markets. Remember, earlier we were discussing about perhaps surplus in the markets. Now that has been cut constantly, and we are very close to a deficit or a break even into the international markets. For the Indian markets, the export as a review for the month of April almost seems to be getting ruled out right now. The weather concerns and the fact that Indian sugar output itself has seen a bit of a low is something that has been supportive. And then the sugar demand in the Indian markets also is quite supportive, and that's keeping the prices higher for us as well. Finally, I want to talk about the cotton prices. And while the textile industry is doing quite well because the cotton prices have come off its highs, last year, remember, cotton in the international markets hit a 11-year highs. The Indian cotton prices were trading at an all-time highs. So from those kind of levels, we are down by nearly 45%. The international cotton prices are now trading at a 2 year lows. The weak demand, recession concerns, China is not buying as much, is what really seems to be weighing onto the markets. And the El Nino weather, which is a concern in the Indian markets, actually works in favor of the US sowing community, and that also has taken the prices down. Also, when you look at the USDA sense, the US ending stocks for 2022 and 23 are expected to be on the higher side there. And then you are looking at a strong global production also. Barring India, China, Australia, Uzbekistan are looking at a better cotton crop. In the Indian markets as well, after hitting 100,000 rupees per bale, we are now trading at around 60,000. And at these levels, there's good amount of buying coming in from the mills, ginners, etc. And the capacities, which at one time had declined to 30-40% as well, are now back at around 60, 70, 80% also in some states. So it seems to be a level which is quite fair for the farmers and for the industry as well. And looks like that the cotton prices will stay at these current levels for some more months to come.